Hello traders, today is the 1st of June. My name is Neville Hornsey and today I'm going to be looking through the charts. Okay, before we get into the actual technical analysis, going to look at the relative strength of the currency pairs. The yen is the weakest, the Australian dollar is the strongest. The CAD, the New Zealand dollar and Australian dollar are all doing quite well this morning. So the bottom left hand corner is doing green, top right hand corner is more red. So it is more of a risk on day. I am expecting to see commodities rise and then hopefully the equities too. All right, looking at the charts, we can see here that we've got an Australian dollar versus the yen long. So if I just go to the sentiment indicator, it now says 52% are looking to go short, 48% are trying to go long. So the actual sentiment has sort of evened off, even though there is just a slight tick still lower in the bearish sentiment. Looking at the chart, we can see that we got in on this level around the 90.86. The reason for that is the strategy is we wait for the 9-period moving average in white to be above the yellow for going long. So that's the filter. Then the sort of signal to start looking for a trade is when the price action closes below the Bollinger Band lower bound if we're looking for longs, and then the trigger is when we get a close above the 9-period moving average. So obviously we would have had a failed trade here. We would have got long on the sort of 28th, 29th, and then eventually we would have been stopped out at the swing low here just below 90.3. But then we had another signal here, 12th of May, price closed below the Bollinger Band. 9 and 200-period moving averages are still looking bullish. We get a close on the 17th of May, and then we can go long. So as you can see, essentially, the price went sideways, so we had time to get in, and we assessed the rest of the market. And then actually on the 22nd of the month was when we decided that there was still bullishness in the Australian dollar and weakness in the yen. So we were able to sort of take that long trade, and that's what's panning out now. So if we just then go through the rest of the charts, just to see what signals we can find maybe for later on today or tomorrow. Australian dollar versus New Zealand dollar, we had a signal to start looking for a long on the 25th of May. And then yesterday we had a close back above the 9-period moving average. So you could have been long from last night's close. And you would have seen today that the Australian dollar after the GDP figure is doing really well. So you could have caught a good trade. Australian dollar versus US dollar is in a corrective trade at the moment. It's going up in a channel. So the Australian dollar is obviously strengthening against the US dollar. The 9-period moving average is below the 200. So we would be looking for shorts. We haven't had a close above the Bollinger Band yet. So we're not looking to go short yet. We could even just get back above the swing high, get back above the 200-period moving average. And then we actually start looking for longs in the future. Euro versus the Australian dollar is actually a short position that we could be in. We had a signal to start looking for a trade to the downside on the 9th of May. We then had the trigger on the 13th of May. Our stops would have been above the swing high, and you can see that we're now basically just starting to make the money if we had actually taken that trade. So for me, the euro versus the Australian dollar is likely to go lower. We are sort of testing this rising trend line. If we had got short at that sort of signal here, so we would have put our stop above the swing high, and then our risk to reward ratio would be 1 to 2. So our target would be down here, basically at the lows of the 5th of April. Euro versus the CAD, similar sort of situation. Yesterday we had the close, so we could get short here. The signal to get short 24th of May, and then the actual trigger was last night, so we could have got short that. That means euro to me is looking generally more weaker against these commodity pairs. Euro versus the pound is currently in an uptrend in terms of momentum. We're seeing that the 9-period moving average is above the 200. We haven't obviously had any signal to get long there. Whereas the euro versus the yen, we had this big pullback down here, 12th of May, and then the signal to go long on the 17th of May. And yeah, we could have taken that trade. Well, like I said, yesterday, been trading that intraday trades on the M30 chart. Euro versus the US dollar. This is the one that I'm kind of waiting for, really, because I think we actually can use the bearish sentiment to go lower. So we've had this signal here on the 24th of May, a close above the Bollinger Band. We're just waiting now for a close below the 9-period moving average, waiting for this trade basically to reject this rising channel and then just carry on going lower. So once we get a close below the 9-period moving average, then we can start to look for shorts. We can just, at the end of the day, even take a short, and then we'll be targeting the 1.03.5. Euro versus New Zealand dollar, no trade. Signals would be to the long side, but only just. It looks like it's just consolidating over time. Pound versus Australian dollar. We had a signal to go short on the 3rd of May. That was the actual trigger, but since then, no trade. Pound versus the CAD, no trade signal or setup yet. Pound versus the yen, much like the other yen crosses, we had a pullback into the 12th of May close here below the Bollinger Band. Then we had the trigger on the 17th of May. And again, I've been trading this on the M30 chart in line with this higher time frame. Pound versus New Zealand dollar, looking for shorts now. The filter is price action has to be below the 200-period moving average. Obviously, we're going sideways, so not expecting to see a trade in the next couple of days. Pound versus US dollar, we need to see some sort of big push up on the pound, spike up, close above that, and then for it to collapse back below the 9-period moving average. At the moment, it's just sort of grinding slightly higher whilst it's above the 9-period moving average. It could quite easily just come back below and there's not trigger us in. Whereas the New Zealand dollar versus US dollar almost had a close above the Bollinger Band here on the 27th of May. It does look like the 9-period moving average is acting as some sort of dynamic support. We've seen it tested twice now and rejected. So hopefully we'll get another push higher so maybe into like this little balance area here around 0.662 to 0.665, and then see if we can get triggered in. Dollar CAD, no trade at the moment. Dollar Swissy, if we look here, we had the setup. Price action is above the 200-period moving average. The 9 EMA is above the 200-period moving average. We had this setup here where we had the 24th of May signal. It closed below the Bollinger Band, just waiting to see if we can get a close above the 9-period moving average. And then you can see there's quite a lot of distance to the top. So that would be my other sort of preferred trade to take. Dollar versus the yen. Like I said, the yen crosses have done really well currently. Had that close below on the 24th of May, had the 30th of May trigger, and then that's been going higher. So I've been trading that on the intraday. DAX 40. That's closed above the Bollinger Band, looking for a close below the 9-period moving average, though my preference really is for this to get back above the 200-period moving average, and then we just start looking for longs in the future. I don't really want to see the indices come lower. UK 100, we actually had a setup and trigger. So we had the 9th of May close below the Bollinger Band. Then we had the 13th of May sort of trigger where we closed above the 9-period moving average. The momentum is still to the upside, and you can see that if we had taken that trade, put our stop underneath there, then we could have been long, and our sort of risk to reward ratio of 1 to 2 takes us for a target up here at 8,011, which if you look to the left would be new all-time highs. Yep, new all-time highs. So that would be good if we could have gotten that trade, but the sort of distance between the entry and the stop was a little bit too big for me. S&P 500, at the moment, momentum is the downside, sort of in the longer term. Price action is making higher highs and hopefully a higher low. Like I said, I am actually expecting to see the sort of equities go higher, though if we get a close below the 9-period moving average, we don't actually have a trigger to get short because we didn't close above the Bollinger Band upper level before. Dow Jones Industrial Average, same sort of thing as the S&P 500. I do want them to go higher. I want to see the liquidity above 35,300 to 35,500 get taken. At the moment, there's no setup or trigger. The Russell, sort of one of the cleanest sort of technical sort of patterns, if you like, is I think this is a corrective move. It's from the highs here, 8th of November 2021 to the lows here, 12th of May. I think that was a corrective move, ending in a 5-wave move down. Just waiting to see now if this is going to sort of continue corrections. At the moment, we've got an ABC. If this comes lower than the B, then that sort of validates that pattern. Or if we go higher and take out, say, the 2,140, then we could actually maybe change this to a 1, 2, 3, and then wait for a pullback for 4, and then the impulsive last wave to the upside 5th. That would be a better scenario for me. NASDAQ USA Tech on the active trader platform. You can see that 65% of traders are actually trying to go long, which generally means I'm looking for a short. We haven't had a setup or trigger in a while. So yeah, this is correction at the moment of the move down from the 29th of March to the 20th of May. Just waiting to see now if this impulsive move is a legit sort of reversal in trend. We've got back above the swing high, looking to see if there's some sort of support a little bit lower, see if we can stop out or at least change the mind of these retail traders that are 68% long. It'd be better if they were more neutral, and then we could go long, counter trend. But yeah, just my preference really. Once we get back above the 200 period moving average, then we can actually start looking for an actual trade. Brent, with everything that's going on with the EU and Russia and Ukraine, yesterday was a sort of a very big red candle compared to some of these little green candles. So there is obviously selling pressure up here. We're waiting to see if there is hedging coming in from the producers at the end of this week. We've got a double top now, so I do expect to see some sort of push higher, take the liquidity, and then collapse lower. We haven't had a setup or trigger, even though the 9-period moving average has been above the 200 for quite a while now. It's just grinding over time, just as we wait to see what the ramifications are of the EU basically ditching Russian energy. Gold, no setup or trigger, just looking to see if this corrects lower. I think we're in a sort of 5-wave pattern. We didn't sort of come up to this low here from the 29th of March. After this low here from the 16th of May, I would have preferred that, sort of see resistance at the sort of wave 1 sort of trough, looking to see if this wave 4 peak is here at 1860, or whether or not we can actually get up towards 1890 before a bigger sell-off. If we take out the sort of low here from the 16th of May, then I am looking for that impulsive moves to sort of accelerate down towards the 1730 and possibly the lows here at 1680. Silver, obviously a big range, look to the upside, look below, got back inside the range. If we can hold above this range, then yeah, maybe we go up to the 200 period moving average. If we can't, then we sort of come lower, and then we're just looking to the left. We've got this imbalance here, looking for $19. Got the US Treasury ETF. That looks like it found some liquidity below the September 2018 lows, got back above. If we can make a higher high now, so if we just need to get back above this swing high from the 26th of April, if we can make a higher high, higher lows, then that could be a reversal in sort of trade. And then the US dollar index, this is the June contract. Essentially, we had a setup here, 9-period moving average is above the 200, daily close below the Bollinger Band on the 24th of May. If we get a close back above this 9-period moving average, then I think we can start to look for the US dollar to strengthen. At least that would be the trade if we with this system. Right, that's all the charts that I look at. Obviously, the last few weeks, we've taken this particular account from 20,000 to 25,000. And obviously with the Australian dollar versus the yen trade still going, we should, sort of top that. I think once that trade closes, we'll sort of start again on a fresh account, and then, yeah, see how far we can take the next account. All right, that's it for today. I'll speak to you again tomorrow.